It's when we see exhaustion prints with momentum that don't carry any momentum, that's when we get reversals. When we see these exhaustion prints here with momentum not having any momentum, that's when we get reverses. And so on, right? So we've got an idea about this as a process. You're trading generally as a rule. Look at all these momentum trades. Look at all these momentums. Sell, 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 sell. So you'll see all the sellers during this process, all the sellers during this process has been a brilliant period for short selling with momentum. And it's only the very last sell trade here, the very last sell trade here that gets absolutely nothing out of the deal that reverses the market through that phase. So when you think about it, imagine you sold every single BSG squeeze and you reversed every time the BSG squeeze failed and reversed. You would have had this sell, this sell, this sell, this sell, this sell, this sell into a buy trade, then this buy, this buy, this buy, this buy into a sell trade. This sell into a buy trade. You can see that these are all winning trades. Now, obviously, depending upon what you're using for absorption prints, and there's obviously loads of different ways we can look at absorption, isn't there? But one of the things we can look at is the concept of commercial buyers or commercial sellers. Well, one of the things that we generally as a rule look at is commercial buyer means absorption, right? That's all it is. There's nothing special about it. It's an absorption print of some sort. So if I want to see absorption prints of some sort, generally as a rule, prop will be trading towards those levels. Commercials buy as the price drops. That's what we see. So in other words, the more times we see a commercial buyer appearing, the lower the price goes, until eventually the commercial buyer absorbs all the selling and the price reverses. This is the idea about selling into absorption. So if I'm going to sell into absorption, let's take a look at these trades, these similar trades. Now, obviously, I would like to see a load of commercial buyers here. So I'd love to see a lot of green in this area here. Let's see what happens. And sure enough, we get lots of green in here. So we can see that we are selling into that green commercial buyer there. We're selling into that green commercial buyer there. We're selling into this green commercial buyer here. We're selling into this green commercial buyer there. And obviously, when we start seeing the commercial sellers up here, we're buying into those commercial sellers. We're buying into those commercial sellers. When we see these green commercial buyers here, that's when the BSG gets reversed, isn't it? So whilst we'd normally try and sell, that's what those BSGs were, selling down into those commercials. But when that got reversed, these commercials decided to stick the price, and the price rallied. Commercials sell at the top edge, it pulls back. We don't get any BSGs in here until way down at the bottom edge here. That's when the BSG came in and we got a good rally back against that. So when we see these ideas, we start to recognize them. We start to recognize that the more green there is, the more bearish the market actually is, not the more bullish the market is. The more bearish the market is. This is the idea, because if I start adding liquidity at a bottom edge, the algorithms go down to my liquidity. We've taught this since we started this classroom with Bookmap. This is what we've taught, because this is how the market works. Why? It goes back to the very core classrooms that we did in order flow. Right at the very beginning, when we first introduced order flow, people suddenly became a little bit open-eyed. They started to say, wait a second, that's completely different from what we thought. Even Bookmap didn't know about this as a process because they've never worked in an institution before. But the way liquidity works, if this is the price, and I add in bids here, what direction do you think the price is going to go in? Well, Bookmap, according to Bookmap, the price should go up. Because you're adding bids in at these prices, the price should go up. Well, the actual answer is the price should go down. The price should go down to see whether those bids are real. Now, it depends where the price is to the bid, right? It depends where the price is to the bids. the bids here represent liquidity. Price trades towards liquidity. It doesn't trade towards no liquidity. Remember, the idea is that the price is always looking for one thing and one thing only. Price looks for volume, doesn't it? It's called price discovery, but I've always said that I don't like that title of price discovery because it's not really a price discovery. It's actually volume discovery, which is a far more appropriate term to use when we talk about these ideas. The price isn't trying to discover anything except for volumes, right? So when the price discovers volume, that volume might be completely false. It might be completely and utterly false. We don't know what that volume is. Most of that volume will pull away, of course, and something else happens. But when it comes down at least into that area, we get a good idea about what is going to happen. And most of the time, that volume does pull. Not always. Sometimes it sticks around and that becomes a commercial buyer. And the price sticks at that price and rallies away from that. Perhaps it comes back to retest it again and there's now no sellers. Well, that's not finding volume. That volume is now gone. That discovery is finished. And what's going to happen now is the price will do something like that. We get that big reversal at that stage. So it's very, very important that we start recognizing. Now, some of the times, finding a commercial buyer is a great bounce point. But that's finding an order flow commercial buyer, which is just purely a volume absorption print, basically. It's completely different from finding a commercial value that has a commercial buyer that has a real money order flow, a real money value attached to it. So, for example, real yields would be an example of something that we can look at in the right environment to find whether this trade has any real money value for the commercial buyer appearing at that price. If there's no particularly strong reason for that commercial buyer, it's just an absorption. It's just the way it's been labeled, of course. Well, we've got a really good example on the gold, actually, if you want to know what's happening on the GC contract. Here's the good example we're talking about here. So if you look at that commercial buyer, all of these, this is just a label for absorption, basically, isn't it? It doesn't mean anything. It's just a label for absorption. But is it an actual commercial buyer? Well, let's take a look at value and try and answer the question. Do you think that's a commercial buyer? Well, of course it's not a commercial buyer. The value is really bearish. So it's an absorption, isn't it? So that absorption means that I should be selling on pullbacks. That absorption means I should be selling on pullbacks because there's still plenty of selling coming in these areas, right? So there's plenty of selling coming in that area, and therefore we get that continuation into those absorptions. But take a look at the difference between those absorptions there and these absorptions here. What's the difference? Value, right? So when we get a commercial buyer here, which is absorption, does it not make perfect sense that that's a real commercial buyer? It's not just absorption. It's not just a profit take. It's a real commercial buyer pouring into the market at that stage because the value is very, very bullish. So absorption is just perhaps the market makers trying to square off a book. The absorption might be profit taking. It's not a reversal price. So when I see a commercial absorption print, so for example during this phase here, is there any reason why you would think that that is an actual commercial sell, or does it probably just mean that we're coming into these previous levels up here and that people are taking profits on an uptick? So with the value kind of bullish at that stage, it's probably likely that this is profit taking, not selling, that's coming in these areas here. So when we flip that commercial accumulation or commercial volume over, we simply can recognize the price is probably destined for higher prints during that period. And obviously when we get the big sell-off here, when we saw that big sell-off, there's no way any of these are commercial buyers. Well, if they're not commercial buyers, what is this seeing? It's seeing an absorption and a reversal, right? It's actually physically seeing an absorption and a reversal. Why does it absorb and reverse? Profit taking. So when value is this bearish, our job is to keep selling down into that commercial volumes. Our job is to sell down into those green areas. These are the weak-handed traders that we're going after, right? So a BSG squeeze into a commercial sell volume or a commercial buy volume is a great trade, assuming it's in line with value. Assuming it's in line with value, we can start recognizing that we should be trading against these and with the momentum, right? So we should be trading against these and with momentum. So what you could actually do is you could change the commercial buy colors to red to remind you that it's nearly always going to be a sell. And we should change the commercial sells to a green, knowing that it's nearly always going to be a buy. And then all of a sudden, your charts are dominated by reds and greens on one side and one side only, instead of having an absorption and so on. I'll do that just now, and I'll see what it kind of looks like, guys. Here, okay. So we'll just change it around. I know it's going to be a little bit confusing for a second. That's okay. A little bit of confusion never hurt anyone. Now, we've changed it around. Now, the reason why we've changed it around is because we are trying to establish whether these are weak-handed buyers. So we're trying not to fade it unless we are absolutely convinced about what's going on, right? So when I'm absolutely convinced about what's going on, all the reds and all the greens should now be together as groups. So, for example, we've now got all of these reds and browns, right? Reds and browns for that sell phase. So we've got, if we're going to try and buy a red, it just alerts us, doesn't it? It just alerts us to the fact that if we're going to buy a red, we've got to be really careful. There's a warning attached to that buy on that red, isn't there? It's almost as if it tells us, you better know what you're doing here. You better have checked your value because you're buying in a weak-handed position. So when we see that, we start to recognize that if I'm going to sell that top edge, if I'm going to sell this, that green tells me, you do realize there's still buyers up here, right? That tells me there's still buyers up here. So if I'm going to sell that, I've got to be absolutely convinced that it's the right trade to be on, to sell into that buying. Because this tells me that this is all selling. If I'm going to try and fade that, I better be absolutely spot on. If I'm going to try and fade this. So in other words, the reds and the browns tell me that there is selling. The greens and the greens tell me that there's buying. If I'm going to fade any of that buying, I've got to be absolutely spot on. So in other words, we can see reds into the bottom edges here and here. There's a lot of selling coming in at those bottom edges. I've got to be absolutely convinced that that selling is easy to turn. And obviously I do that by checking on my value. And I can see with the value that that selling is obviously a bad sell. That seller is in the wrong place, correct? Yes or no? Well, if that seller's in the wrong place, is that not exactly what I'm trying to find for a buy? If that seller there's in a wrong place, is that not exactly what I'm trying to find for a buy? In other words, I'm trying to find the trade opportunity that naturally stands out in the wrong place. So when we start to recognize some of these ideas, we can see all of these reds here, and we say, wait a second, the value's going straight up here. I want to buy against those weak sells. I want to buy against those weak sellers there. I'm going to go after this bottom edge here. You're actually doing that bit of business right there, aren't you? So in some ways, this actually makes perfect sense to see it set up like this. But it's all in your interpretation, isn't it? It's all in the interpretation of how you go about the analysis. It's up to you guys. It doesn't make any difference to me how you see it, whether you use absorptions as the same color or a different color. It's just a color at the end of the day. But it's the idea of being able to quickly interpret what you're seeing. The idea that green means buyers. Even when you see green at the top edge, it still means buyers coming in. So when you see a higher high up here and you don't see any buyers coming in, that's called exhaustion, right? So the exhaustion print up here. No wonder this BSG couldn't get any higher, because above it is exhaustion. A BSG here has buying at higher prices. So that BSG there going into that buying at higher prices, it goes higher. Do you see what I'm showing you? But at this higher price here, there is no higher value. There is no higher buying up here, is there? There's nobody up here buying into this up here. And because there's nobody buying into that higher print, when these guys buy here, there's nobody above them buying. It's exhaustion. So when we know that that's exhaustion, we start saying to ourselves, wait a second, if this buy fails, that's it. This is doomed. This is going straight down. And it gives you a very safe trade narrative right there, doesn't it? It gives you a very safe trade narrative right there. And the price collapses off of that print, which is absolutely ideal. Let's take a look at the let's take a look at the Nasdaq to see if this makes any sense to anybody as well, since Gene's mentioning the Nasdaq. They're just in the pre-market there, so we'll pop a little So what do you think of this narrative here, guys? Does that start to become quite interesting? All this selling at lower prices. All this selling at lower prices. If I'm going to buy that, I'm going to have to be absolutely convinced that I want to be long the market. So when I look at a value line, what's the answer to those questions? Do I want to be long the market or short the market? Short, right? So when I see buyers, is it not a good place to get short? When I see buyers, is that not a great place to get short there, for example, or here, for example? Is that not a brilliant sell opportunity to sell into at that price there and at that price there? So when I see this narrative of unfolding here, and I've now seen a very, very strong reversal, I could have made a pretty strong case to buy into that phase, couldn't I? I could have made a very reasonable case to have been a buyer into that phase just there. The sellers look as if they've overcommitted to the downside, and then we've got a failed auction here. Unfortunately, we didn't develop any new upside value in this trade. So when the price broke back above this BSG here, we can see that there's probably nobody willing to buy at higher prices. They have an attempt here, but because the value drops, when that market then reverses out of this BSG here, you're probably thinking, right, bottom edge squeeze. Makes a lot of sense at that stage, doesn't it? BSG failure. So when we start recognizing the narrative behind some of these trade ideas, you start saying to yourself, wait a second, this all actually does make perfect sense. This idea of absorptions isn't always a net long position. In fact, the vast majority of absorptions is probably just simply profit taking, maybe dealers trying to square some book. And remember, the dealers will pull prices far enough away to then load up to push the price up enough that they can average out into an uptick and clear their book. So a lot of these pulls here might just be dealers buying, push it up, profit. 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 And they're just clearing their book during these down phases here. But the market's still pressuring downside. So when you see that there, you start thinking about the possibility that they'll just take it up a little bit and then sell it straight back down against them. If I see a lot of buying at higher prices, which we don't, we just see a couple of occasions where buying appears at higher prices. But you can see what happens into these higher prices. We don't just pull back and then go. It pulls all the way back. So that buyer is getting jammed at those higher prices. Perfect example of the narrative. Perfect example of the narrative, right? So when we start to see some of these ideas, the Nasdaq buy at the bottom edge, for example, has just happened. And you can start to recognize the little buy that came in at the very, very low print, but short-term value is going against that buy at the moment. We'll see if it gives me another reversal off of that commercial low price at 906s. Let's see what happens.